Here we are looking at the best momentum companies on ASX and trying to identify the trading opportunities, which often come from the launchpad, because that's the precursor to becoming a market leader or a momentum leader. The list of the 30 of each has been sent out to YouTube members. Thank you very much for the members and the support. And it goes to them at the same time to Gary Glover. And he's been through the list to identify the best charts of each one so that we can learn from, study and understand how to identify these trades, what the best leaders do so that it can help us trading today and onwards. Good morning, Gary. How are you?
Yeah, I'm good, Chris. I'm good.
We've had a strong rally on the market. We've had a lot of momentum bouncing out of sort of a V-shaped recovery, a lot of opportunities. And something that you signaled in your Tuesday reports is that you like to look for, at that turn, companies that are up in that 52-week high quite quickly after the market low. And no doubt one of them is on the screen right here. So starting it off, what's the momentum leader that you're looking at here?
Yeah, this is number 13 on the list, number 3, obviously 360 there. So we know this has been a bit of a past leader and stuff there. So obviously it has shown strength at a low, but just had a lot of questions this week actually on the, because I've sort of been trading a lot of the 0, 1, 2, 3s in the last few weeks. I mentioned that a few times. And so just, what we're actually looking for there is sort of 3 higher lows. Now, oftentimes that they might set up over a month or two, Chris, but in this recent low, because it's been quite deep and quite a volatile low, we have seen those 0, 1, 2, 3 set up over a shorter time frame. And like 360 is a classic example there, because obviously we had the low on the 7. Yeah, it's had that little pop up and come back. That's our sort of 0, then our 1, 2 days later. And then it sort of rallied again and then come back and made a second high low, rallied again a few days, and then probably goes sideways. So what you want to sort of see is it normally will lighten up, go sideways on light volume, a bit like the VCP there, with that third coil will lighten up there. And then that's our sort of our 0, 1, 2, 3. And then we're looking to sort of break out of that, break a range or a range break or something like that, then sort of follow that momentum. So that's sort of what the 0, 1, 2, 3 sort of setup is. It's normally sort of over a wider time frame. It's normally a bit more symmetrical in nature. I think we had a S32 was a really good one last year. But that's the sort of the setup there, which we have seen quite a lot of those here recently. So, and a lot of good ones there. But normally they take a lot longer to build. But in this market, when we see something quite deep here like this, we have seen that volatility low sort of come in and still gone up there. You do want to sort of see, similar to momentum studies as well, we want to see the stocks that are jumping out of the gates as well. So the ones that have, they jump up hard and then come back and then jump up hard, come back and then, so still showing that sort of sign of strength there. So I thought just that 360 was interesting there, because that was a good 0, 1, 2, 3 in there. And then look at sort of continued on there. So even if you're sort of coming in at 20, it's already up to $31. So it's a pretty fair move, pretty quick period of time. So yeah, you want to see that sign of strength, but you also want to see those 3 higher lows there, normally over a long period of time, but sometimes they set up over a shorter period of time. Like last year, we weren't getting many of those setups, but I can tell you in the last month or two, we've seen dozens of them. So, yeah.
On that 0, 1, 2, 3, I know this is something you've been trading about and talking about for a long time, and we'll put a link to a previous study you've done before of 0, 1, 2, 3s. Is it possible that a 0, 1, 2, 3 could also be a VCP, but they don't necessarily have to be at the same time?
Yeah, no, that's good, Chris, because we have seen, I've actually traded quite a few actually in the last couple of weeks where we've had the 0, 1, 2, 3 and the VCP setup. So the 0, 1, 2, 3 might set up just prior to the VCP breakout. So I think something like WEB, which is not the strongest one there, but there was a 0, 1, 2, 3 in here. And then we had a VCP in it, although it's under the 50, but then it breaks out. So we did sort of see that little B wave break in here, but maybe our 0, 1, 2, 3 might have set up a day or two earlier. So it's good. I mean, if you get that 0, 1, 2, 3, you get an early sort of entry on the break, and then you get the VCP, you can add to that as well on that trade as well. So you're actually sort of getting them together. But yeah, there's been quite a few that are set up like this. probably been a few stronger ones than this, but yeah. But yeah, we've seen a lot of those 0-1-2-3s actually sort of set up a VCP sort of style. Yeah, I mean, that's probably the one thing there coming out of these deep lows is that like a lot of those 0-1-2-3s have been under the 50-day moving average. So I know a lot of people like to, I prefer to sort of buy those VCPs above the 50-day moving average. But it's been a few sort of setups there under. So number two that I liked it was number 16, MTM there. Just a bit of a just a couple of sort of cup and handles on here. So see, we've had that good strength in volume and then sort of pull back on lighter volume there. That's a little bit of a handle there. I know it's sort of quite a bit lower here. Did sort of pull back and then pop again. Then I had another one. This is probably a better sort of handle because it's sort of just under the high there. Again, another tight congestion, and then the volume's pretty good here. So that's a good setup. So sometimes, I mean, it's funny. I looked at these sort of cup and handles over the years, and because this is one thing that hasn't been my sort of strength there, pattern wise. But I've noticed that yes, some of them set up at the at the at the cup. Someone set up a lower cup. Someone set up a higher cup. So, but what's probably more important that after sort of studying them for the last couple of years, in my opinion, is actually the volume profile. So seeing that healthy volume profile up into the handle. So whether it's a lower handle or a higher sort of handle, what's important to me is probably the volume profile. Because then if you see that sort of strength on good volume, and then it pulls back on lighter volume, then that's a good sort of setup there. And then away we go. So, and oftentimes what often happens there, Chris, is sometimes they don't have the handle here. They just have the handle near the previous high. You get your little cup there, then it breaks through, then it can actually come back and retest the high. So we get a handle below the cup, and then we get a handle above the cup sometimes as well. So you can get sort of back to back sort of little handles there. But the volume profile is pretty important. So that's a really good, like I think MTM here just sort of shows us there that's a really good volume. We had 5 or 6 days in there, really sort of strong volume out of that low, and we saw good volume on this rally as well. So that's why I think the volumes is really important there. CAT is sort of one here that again we've had pretty good volume up here. This is a slightly higher handle there, and then we had 1, 2, 3 days in here, and see how the low, we didn't see any selling here, even at a new high there. And then once we break out here, we've gone on there. So again, we tend to run up, can come back and retest as well. It does have that little throwback a lot of the time, and then go again. So that's what can make this sort of cup and handle tricky, that sometimes they can be under the previous high, and other times they're above it. But I think it's really important to sort of study the volume profile, sort of do a little bit of Wyckoff. So look at how strong the move is, how good the volume is, and then just look for those sort of drive there. But you are typically looking for, I know sort of David Ryan talks about the 3 days. So, the 3 days sort of handle that. So just seeing those sort of, 3 tight days, not much volume, that's what he likes to sort of look for. So I think if we're looking for those sort of cup and handles there, if we see those 3 days on lighter volume, that's what ideally there. So again, then maybe this one's pull back here 1, 2, 3, 4 days, you might say here, but a bit messy, but typically like a little 3-day handle is a good setup here. So, looking at Catapult's been pretty strong here. This also did like a little bit of an undercut. It's probably gone a little deeper than the previous low there, but it really only stayed under there for 3 days. So I know that Matt Caruso there's got the 3 EMA, so that if you get a little false break, undercut in the top half, which this is definitely in the top half. Once you sort of once you come back above it, you're basically sort of buying that third day break there. So it's a bit of a gap up there. Would have felt like maybe not an awesome entry, but it has gone on with it. That's CAT. The other one was AUE, which was number 24 on the list there. Just starting to sort of see this build a bit here, a little bit of a VCP in here. Bit volatile, but this was a nice little tighten here. And again, we saw some good volume up into that. And then a pullback there, and the volume did dry up here. And then we got a bit of a driver here on pretty good volume. So it's a bit sort of small for me. I like to sort of see them above 50 cents, but just interesting setup here. This has had pretty good volume here, Chris, as well. So again, this will be interesting to watch here. Maybe if we see it, so far we haven't seen too much selling here. So maybe we might get another little handle, something, little sideways congestion. So that's definitely one to keep an eye on there, because the volume profile is still pretty positive. EDU, too small for me personally, but just thought this is an interesting setup there because, this is an impulsive move here, and this is a corrective, again, your ABC, and the struggle to go down here. And then obviously we've got a catalyst there for a jump. And, when they come back in a corrective manner, they're pretty low volume. They're generally going to sort of follow through. Not the easiest to trade, a bit small, but just
Good example.
Yeah, just showing that impulsive nature, then the corrective there. And it's, again, one thing about Elliott Wave, can be good and bad for a lot of reasons there, but just looking for those ABC pullbacks is sort of, that's probably the best thing you can learn with Elliott Wave, in my opinion there. There's a few other stocks on that quality list that I like, but quite a few of them have overlaid onto the
Launchpad Weekly.
Launchpad as well. So I thought I'd leave a few of those for that. Yeah.
That's a good lesson with the 0, 1, 2, 3, because I know you were trading it and you kept saying, look, I'm just not seeing them. I'm not seeing them. And then trading out in this low, particularly before and after recordings, you were telling me of all the 0, 1, 2, 3s you were getting, how they were giving you entries. And this last 4, 6, 8 weeks has been pretty good for you. And it was fair to say a lot of that's come from 0, 1, 2, 3s.
Yeah, no, definitely. And I think it's sort of one of those things, Chris, as well. I remember the chartist used to, he had sort of two systems there. He had like a trend following system, and then he had like a volatility sort of back to the mean sort of system as well. And so the two systems were quite different. So they weren't sort of similar. So what it meant was, while one was working really well, the other one didn't work so well. And then when the other one worked well, it didn't work so well. So you always had one of the systems sort of running hot at the time there. So, and if you remember, like those episodic pivots, if you remember that we had 2 or 3 weeks in a row there, they were just all working. So they were just gapping up and running. Whereas I think the last probably 2 or 3 weeks, we've had the EPs have been really mixed. So they haven't really been hitting the lights out. And then like last year, we had a lot of VCPs setting up and they were all working. So you sort of go through. That's why I think I know some Minervini's just got the one sort of style where he adjusts his parameters based on the market to go for sort of smaller odds there. But the beauty of having a little bit of a playbook with maybe a couple of different trades is that don't pick the same type of trades. Pick maybe a few different types that are going to probably do different things in different markets, or maybe those sort of trades will only be, will only work at certain times in the market as well. So it's really that if you're looking for that undercut in the strong stocks there, you're not going to see that at the bottom of the market. You're only going to see that after the market's had a run and a pause. And the EPs, you're probably going to see them work maybe heavier in earnings season rather than other periods of the year as well. And then the 0, 1, 2, 3s aren't going to work. The market's been running for a year. That typically sort of come after a bit of a heavy sell down. And then the VCPs don't tend to work at lows. They tend to work maybe a month or 2 after the lows in. They're sort of building phase there. So it's interesting there. I think you just sort of need a few trades for different seasons. So definitely. And I guess if you do have those setups there too, you'll probably get a feel for when they do work the best as well, which I find just as interesting.
And that is definitely interesting. And the weekly launchpad, this is something you've noticed before, is when you see something light up the launchpad, a theme with a huge number of constituents showing up in the week. That's led to quite often some great trading. We've come out of the lows. We generally don't tend to see them light up the launchpad this close to coming out of the lows. Is there anything standing out to you, or have you just drilled in for individual companies?
I probably personally drilled into individual companies, but I did obviously notice quite a few gold names on that list there. So I know that, like, Spartan's obviously been one of the leaders there. So we have seen a lot of stocks, like a lot of gold stocks have actually pulled back, have done these ABCs that we talk about in terms of Elliott wave, and they've come back to around the 50 as well. So that's kind of interesting. The only negative aspect about a lot of the golds is, and if you look through them all, the last ABC pullback, although that looks pretty instructive and then you can rally again, most of those ABCs have been the largest corrections of the move. So we've seen it. Normally, I know McLaren used to talk about like a strong trend is strong as long as the corrections are quite uniform. So if they have a pause and they pull back, say 50 cents or something, next one pulls back 50 cents. It's just the size of the correction should stay sort of similar size, or maybe even get smaller if you really, if it's really sort of building up. But once you actually have the biggest correction of the move, that can be a bit of a warning sign that what it calls like an overbalance of the trend. So a lot of the golds have actually had some of the biggest pullbacks of this trend here so far. So that's a little bit of a warning sign, but they all have, like most of them have actually held the 50. So they've been obviously pretty strong trending here. They have kind of just sat on top of the previous high, which I've constructive, but Spartan's probably one of the stronger ones there. It's had that ABC come back here. So just got to be wary of that, just because that's quite largely, I think, NEM. So to see how the size of that moves quite large, that large correction there. I think even Northern Star as well. So that's again, it's quite a large pullback, that last one. So it's just, that can be like what they refer to as an overbalance there. So you can go back and retest the higher overbalances, but just telling us to be a little careful with gold there, just because the last correction has been quite large in size. But at this stage, look, that trend's still pretty strong here. So I'm still playing a couple of golds as well. So yeah. What do we got there? JLG. Did I talk about AZY? Did I?
Not yet.
Oh, AZY was that was sort of the first one I looked at here on the sort of on the weekly launchpad list there. Again, that's see how it's come back to the 50 there. I mean, it's pretty held here, nice and tight here. It held the 50 and then exploded higher there. So that's probably, you'd say this is probably just slightly larger, but it's still this one's at least sort of fairly uniform so far. That correction, maybe that correction, they're similar sort of sized. But yeah, it did hold the 50, which is a good sign there. So that's sort of one that's done pretty well. I think that AZY, I think the other one that we sort of featured the last couple of weeks was GG8 as well. I think that sort of came back a few times there and tried to rally as well. But yeah, that was pretty strong. John Ling was on the list there, which is interesting there. So actually, this is one that I actually have traded myself here, Chris. It was an interesting setup because this had like a little descending wedge here on the downside, which is not something I used to trade a lot of. I don't trade anymore. Did make a little bit of a higher low in here and then start to run, and then it really tightened up in here. And I like this little tight structure here. See how we had like 5 or 6 days in here, and then we sort of came out of the range, and that was a pretty good sign there. But then it actually made a false break here, and expanded to the new high, and then expanded to a new low. So it actually, I like to sort of, run these sort of tight stops here. So I got stopped out of some of my position on the retest of this low, because I didn't like to sort of see that, if the trend's going to build sort of higher lows, it shouldn't sort of break sort of swing lows. So I did sort of get knocked out of mine, but it is a stock that I sort of, it's trading about 630 mil market cap, and it does about 1.1 billion revenue. So I think it's probably one of the cheapest stocks I can see there, just on a revenue basis there. And obviously thinking about the amount of storms, flooding, Queensland, Sydney as well. I think it's going to have a pretty robust domestic season here as well. But putting that aside there, what I did do actually after it sort of knocked me out of some of it, I went and had a look at the stock and sort of see, because sometimes each stock's got its own personality. And I went back and looked at John Ling, and I found like 2 out of the last 4 lows, it did this expansion exactly like this. I think A2 Milk knocked me out of one of these a few years ago and then doubled in price. So it actually, when I saw the false breakdown here and then come back in the range again, I actually did add to some of my position just because I'd seen this stock have that personality. So sometimes it's worth, even though it breaks some of your trading rules and maybe knocks you out. But if you go back, if you're still sort of feeling like this stock's going to potentially go, because that A2 Milk, I never got back into that. And it took off, and I was sort of pretty confident about that stock. And it was a bit of a lesson for me just to if I get knocked out of it, not to go back and revisit it, not to sort of keep my eyes off it. So
when I've done the research.
Yeah. So I went back and looked at John Ling. I went back and looked at all his price history, and I thought, wow, this thing does it. It's done these expansions about, the last 4 lows. It's done on twice, expanded, and then taken off like this. So, so it got me back into it actually just by learning that. So I implore people to sort of, sometimes you get, got to have your process and rules there, but don't be afraid to come back in if you sort of have a strong feeling there. And that's probably a bit of an experience thing for me, because I do have really tight risk management parameters when I get knocked out all the time. So, I do get knocked out, but it's okay to come back in again if if it's to see the right setups there. The other one was PDI. I thought this looked really good, Chris, as well. I almost sort of broke my rules on this one there, because I thought this was like it's a really strong trend, really robust there. You saw the whole thing tighten up in a really, really good VCP in here. So, I thought once we sort of closed above 38 cents, that was a really good sign there. But I didn't buy this one there. Just I stuck to my rules there. But if this was above 50 cents, I would have definitely was. I thought this looked really good.
We're in the same boat. There were 3 or 4 just under the 50-cent mark in the last 2 weeks that have coiled up and VCP'd nice and tightly like that.
Yeah, so I thought that looked pretty good. And the other one was EOS. We sort of, I think I talked about this one last week, outside of VCP. I know it's not the strongest looking stock here, but I do like the sector. I do like that. The scene there was sort of drone shield and hostile shipping and that sort of kind of war theme there. They've been pretty strong sort of sector there, but that made a false break here. Then it pulled back and then made tightened up again, and that pulled back in here and tightened up again. So definitely got our VCP in here. We actually were sitting above the 50 as well. And I think I sort of said I think it was actually last Friday here, was this day here. That actually meets my parameters to actually trade that. Because then you've tightened up above the 50 and you've broken out there. So it's not strongest sort of looking stock there. But again, this is sort of, Stan Weinstein looking at the sector. Sector's pretty robust. So it has a strong sector. So yeah, that's why it's sort of, yeah.
As you're talking about the strong sector, we know that defense and aerospace companies have been consistently ranking really highly on the launch pad for a couple of weeks now. It's just not a very diverse segment on the Australian market. So we've got a handful in there that are really shooting lights out, but the numbers are quite thin. So I guess this one has followed suit and done it quite explosively. So
yeah, so it's a good setup there. So that one's worth keeping an eye on. They might actually consolidate here and tighten up here, but it's kind of been building here. I know it's got probably a lot of overhead here, but good thing is that it's actually been building for a while. So it's sort of starting to build a bit of a base there. So starting to come through. Volume's pretty healthy as well. So yeah, definitely want to keep an eye on here actually. So it'd be nice to sort of see some little congestion, a little tight handling here. But it looks okay.
Well, just as you're looking at the chart there, I looked up the numbers on EOS, and in the last month, it's been on the launch pad 7 days. So the other IMB and Triple T have been on it 5 times, but EOS was in it 7 times in the last month. So
yeah,
adding credence to what you're talking about there. What's next on the chart? You've got Seek, is it?
Yeah, I just put sort of Seek on there. Just again, it's sort of like, see how we had that low there I guess, again, another sort of 0, 1, 2, 3 setup there. And then we've had a nice little rally as well here. So just another sort of 0, 1, 2, 3 pattern as well. Sort of, this one there obviously is below the 50, but they often are actually if they're coming off sort of lows there. But again, what you're looking for is you're looking for those last, and I think the key there is to look for that, so you have, there's a bit of symmetry in this sort of setup, and the last 2 or 3 days as well, pulling back pretty light volume. That's sort of the key there. It's got a lot of similar characteristic to the VCP, really. But yeah, I think it's not about sort of setup here. That's all. So the beauty there is your risk is pretty tight, and then hopefully your upside's pretty decent. There's a few other interesting stocks in the launch pad there. You might have had a few questions regarding a few others there, Chris. But I know IPX was the one that I noticed. That's one that sort of showed that strength there and then sort of congested. And I thought it was going to break up there, but it ended up sort of breaking down here. But it might have just created a little false break there. Because again, there wasn't, you look at that sell down there, see there wasn't a lot of volume in that. It wasn't like an aggressive, it's just come back to the 50. So it'd be nice to sort of see this little congest here, maybe a little handle or something there. It'd be nice. So it's definitely one that I'm still keeping an eye on. But yeah, a little handle here under this hold high here would be nice.
And that's almost like, is it a failed VCP over the 50-day moving average where it sort of dropped down at the start of May? Then
yeah, I mean, it's sort of because I think, see how it did. I was looking for this sort of setup. See how it sort of rallied up nice strongly. Then it sort of stayed nice and tight in here, and then it came through the top side there. I think Appen did the same thing, did that little rectangle sort of tight. So I thought this might have stayed in this little tight pattern and come out here. Threatened to break out here once or twice there, but didn't go on with it and then come off here. So that day there actually didn't go through there. So I think I actually did buy a little parcel there on a little B wave. And then once it started to break down here, I made sure I was out of it there. But I never really got a big parcel on because it just didn't sort of close above that level there. I just like to sort of, when they're going those sort of sideways orientation patterns there, you want to sort of see the close above that, outside that range there. So just never did that. See how it sort of stayed in there. Yeah, and we've ended up going just below here, but yeah, it sort of sounds funny. It's a bit like those sort of, oftentimes those sort of descending wedges and even the rectangles. The one thing I've sort of learned about those is that the rectangle is actually a really good setup because it's actually, I think it's something like a 97% success. It's only like a 3% failure rate on those rectangles, so really low failure rate. And the interesting thing about the failures too, is that if you do get a failure on the rectangle, and it say breaks down or breaks up or something there, but if it actually doesn't go on with it and then breaks back below, then that often will mean it will go the other way. So this one here, actually, it should have been, the fact it actually came back, like it stayed below here for 2 or 3 days. And then as soon as it closed back above the range, that's almost a trigger for me because it's actually like a failed breakdown.
failure.
Yeah, it's a failed failure. And then we sort of know, well, that's failed here. Then that's going to go opposite direction there. So I've seen that a few times before. I remember trading one. One of my first 10 baggers was, I think NAB did something like that, sort of got, had a really impulsive move, sort of had, get a real rectangle there, and it failed down, broke out. Oh, okay, this is going to roll off here. And then it came back in the pattern again. I thought, it's had like a $2 move. So I think I did like a short-term option on it. But it ended up, in short-term time, it actually went straight back up to the high, and then it moved the high, the rect. Yeah, so to the height of that rectangle there. So that's what, 360 down to 320. That's a 40-cent range. So we're looking at a 40-cent target on the upside. So looking at 410 would be a target on that rectangle. So I think at the time there, that was like a $2 move on NAB, and I think it did it in 4 days or something. So I just did some short dated options.
Long vol because
Yeah,
goes through your roof. And
I think one of the seats dealers did it with me, and he was pretty happy. So, but those 10 daggers are very few and far between, I can tell you. So yeah, But it is.
Well, just quickly on that one, actually, where it sits now, if you're talking about breaking the B wave and you want to see the close, would you rather buy it as it breaks the B wave intraday or hold back until towards the end of the day where you can see a solid close happening? What would you rather on an entry like this?
Well, this would have been a good trigger here, and closing above this range will be a good trigger as well. So, in a perfect world, once it had come back into that rectangle, you'd buy some, and then you might add to it on a close above this rectangle as well. So, I mean, today is looking quite constructive here. So, yeah, I was hoping it might, get the little 3-day sort of, little handle here would have been nice, but doesn't always set up perfectly, Chris, as you know. They can come through, but that looks pretty positive to me. So, yeah.
Well, I did have an extra question for you, but it was on the trading and your lessons over the last couple of years. And you've changed and adapted part of your trading style for different reasons and then sort of focus on different aspects of your trading. So what have you learnt about enhancing your trading, improving your trading? Is it sort of, I remember you were talking about focus a while ago. What do you think about?
Yeah, I was actually listening to a trader there actually this morning who's had the single largest payout for like a little prop. Now those sort of smaller prop houses there where you sort of put up a little bit of money there. I think if you have some success, then they play it to leverage up, and then you've got to trade it for a certain amount of time before you draw it out. So I think this trader basically drew out $2.5 million to the profit of trading gains over about 2 months, which is like the biggest payout there. But although he's been trading for a while there, he did mention that his sort of training is not a scattergun approach; it's a very focused approach, and so he'll actually just focus on one thing each month. So, so the thing about sort of like Kobe Bryant was sort of, about basketball there, like in the off season there, like I think the first off season there, Kobe just practiced one thing, was just the jump shot. He was just focusing on the jump shot. And then I think in the second season, he focused on sort of his movement, trying to get into more space. So to get away from players, to get free to jump shot, whatever, more time there. And then I think in the third year, he was just focusing on conditioning and strength as well. So he wouldn't be trying to focus on all elements of his game. He would only be focusing on one element of his game and just putting all his attention on that one element. And this trader was sort of talking about the same thing, is that, like he was talking about risk management. He said, for the month, I just focused on risk management. So I didn't focus on everything else. So everything I did, and he was talking about, certain books and certain podcast things. It's like, I just listened to that same podcast as you talk about one. I actually wrote down a podcast in one book, and so I've just read this book over and over again for 1 month. And so it was just really, really focused sort of training and stuff there, which I thought was really quite interesting there. And it's a bit like anyone who's read Atomic Habits. So if you haven't read Atomic Habits, then it's probably the best book we've read in the last 10 years. But if you haven't read it, you should read it. But that really is about sort of focused learning as well. And the thing I loved about the Kobe sort of reference, and also his referencing sort of how he just spends focuses on one thing for each month, is that month is, that allows you. I mean, the Atomic Habit talks about, it takes about 20 days at least to become a habit. So if you do focus on one element every day for a month, then there's a good chance that'll become habitualized in your process and in your habits. And then that's, you'd sort of master that. So, to become a master at anything, you've really got to be sort of focused on it. So I just think that's really interesting from a trading perspective. And yeah, I think I mentioned to you a couple of months ago, like just 1 month was just all VCPs, all Minervini. I just read, I made a sort of,
I think we discussed it on the podcast.
Yeah, I made a focus. I just listened to what was this Minervini. I literally tagged everything I could find on Spotify with Minervini on it. Just listened to every interview I could. And I just look at VCPs and I just focus on that one element there. And then following that month, actually, I was focusing totally on my my risk management process in terms of how I exited. So what multiples of risk I was looking at. And I started with because I like to get scaled up in a position, and I like to take a portion off on a multiple of my risk there. I think Jack Casellas has got a couple of videos there where I think he takes off half after 2 times his risk movement, and then he lets the other half run. And those who follow Kalamagi will take off a third to 50% once it sort of has that 3 to 5 day pop, and then he'll run the rest to the moving average. So the pros are sort of selling into some type of trading heat and then trailing the rest, some other mechanism there. So I the last month for me, I've actually spent trying to master that, trying to set up a really, really hard process there, because I don't really want to have too much gray in my trading. And the one thing the best traders talk about is just having a really simple system. Like it's just a lockdown system so that the process is not, there's just not too much gray in there. So you want to have a little bit of autonomy, but not too much, So I've been trying to sort of get my scaling in and my scaling, out. So the last month for me has been all been about my scaling out. And it's funny. The whole month we've just been focusing on that one element. And I feel like I've actually really got close to sort of something pretty tangible there, because I've sort of just gone over and over and looked at all the other traders and the same sort of thing. So it gives you inspiration looking at other people that maybe you can tweak it towards you, because it's all, as we know with trading, Chris, it's really got to be, sort of suited to you as your personality.
Very personalized.
Yeah. So whether you're more of a scalper, whether you're more of a holder, or whether you need to be right more than wrong, whether you don't mind having lots of failures as long as you get the big winners, your personality will suit a certain style of trading. So it does have to sort of measure up and match as well. So my scaling out has sort of has met that as well. So I don't need to hang on to and stay with the trade forever. To me, if I'm sort of getting, say, 2.5, 3.5, 4.5, and say 8.5 or 9.5 times my risk on each portion, I'm out. I get, say, a net 5 times my risk. I'm happy with that. That's, because I was happy trading a 3-for-1 system years ago and taking out 3 times my risk. So if I can net out, say, 4.5 or 5 times my risk with a that's pretty good. Now I'll move on to the next one. That's, because I think I get disinterested holding on to trades too long. So.
You're making a solid amount of money and it's going in your favor, and you want to find something else. If that's the personality, then you got to Playbook.
Yeah. But I mean, it's sort of like you do, I've tried to sort of train myself to hang on to that longer, because it is sort of like the whole, the great phrase there is, picking right and sitting tight. So, definitely being able to stay in those trades a bit longer. That's definitely something I've learned the last couple of years. So, but yeah.
Well, no doubt that has come from focus. And if you want to learn more about focus, particularly the 0, 1, 2, 3 strategy and what Gary's talked about before, we've got a video specifically for that, and we'll put that on the right-hand side here. Thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.